Hey everybody, this is Jim at SP500chart.com. Still struggling with laryngitis. And I won't bore you with all the sordid details, but I've got something in my sinuses that gets down in the back of my throat and just wreaks havoc. And it gets worse from the morning to the end of the day. I guess because I'm upright. But anyway, let me just save my voice, ask you to not proceed until you have read what is in this little box I'm showing you right here. Read that, pause it, and then we'll go on. Well, today we are flat in the S&P. We pointed out this little channel that developed yesterday. Indeed, we got over this top line, but really didn't go anywhere with it. Still could very well do something worthwhile and get back up to test this broken support line again up in the mid-1940s. I think that's a pretty real possibility. The other thing, though, that I wanted to show you, and really I don't think this video is going to last very long because my voice may not hold out, and also there really isn't anything that new to tell you about. But I do want to throw a couple of extra lines on here that may give us a clue going forward. First, if we start back here on the highs of the 30th, or not the high in the 1st and 30th, but this high late on the 30th, start a trend line and pull it down across the high of 2 days ago, you will see that that line kept the S&P in check all day long. So I'm going to make this a color that is not represented very much on this chart. We'll go with a kind of that teal color. And since we have tag, bottom, tag, bottom, tag, let's put another trend line up here. This one is going to work off of this bottom here and go back to the lows on the 1st. So it looks like on a short-term basis here on this 5-minute chart that we've got potentially a little descending wedge. If that is the case, then getting over this line should bring us back up to test the levels that were in place before the wedge started to form. So that would mean a move eventually back into the 1960s. But obviously that's predicated upon getting over that top resistance line. Now you'll recall too that I've developed this little habit where after a wedge or a triangle develops, I'm going to get rid of these lines, by the way, those right there. After a wedge or a triangle develops, one thing that I've found helpful to see if it is a valid pattern is to, after you've seen your top and bottom lines, do a little test. Take a line that is halfway between your resistance and support line, when that looks to be about right there, then drag it to about halfway between where those lines exist at some point in the future. And that looks to be about there. Then you ask yourself, does it look as if we are getting any technically significant action around that line? And if the answer is yeah, it sure looks like it, then then I would say that just gives one more layer of evidence that indeed we may be looking at a descending wedge that by itself carries with it an eventual bullish implication. So where do we have our areas of technical significance? Well, we've got this right here. We've also got a little one here, but we were a little bit too low at that point, but here we had support on that line. Here we had resistance on it. And just today, pretty much some support on it. So it looks like there is some validity to that little bisecting line. So what do we look for tomorrow? Well, would not be surprised if we come back down and touch this bottom line. No guarantee. If we get some good news, this top line could break. You know, when you have a descending wedge, you expect the top line to break. That's pretty much probably an 80 to 85% rule. If you have a descending wedge, the top line is going to break. Every now and then the bottom one will, and you'll find out that, oops, it wasn't a descending wedge. Instead, we were in more of a channel. But that's why I put this little middle line on here. It has a tendency to better define those little, almost like a fractal pattern. Those of you who've dealt with fractals know that you can look smaller and smaller and smaller and smaller, yet the fractal continues to produce a similar mathematical image if you're looking at it in terms of an image pattern. So while we had a pretty good distance between the top and the bottom here, and we had some little monkeying around, if you will, in this middle area, here we had less between the bottom and the top, but still the middle had significance. Here even less, but still the middle had significance. Here even less, but still the middle had significance. So this is kind of interesting to watch. So I would say, I would think at this point 1900 should hold. As a matter of fact, I sort of think we're not going to get there. But, I mean, the markets are the final arbiter of any opinion I might have. But let's just keep an eye on this pattern going into the rest of the week. If this line breaks, then that should be setting up an eventual move up to, I would say, up to test this broken support line right here around 1967, 1968. I would think as a reasonable outcome from this descending wedge. So there you have it, guys. That's the video for August 6, 2014. It was a flat day, but it was not a day that didn't give us something to consider. So thanks for tuning in. Thanks for putting up with my voice. By the way, I'm doing something about this. I'm getting rid of some some potential dietary things that might be causing this, and I'm just trying to clear up what's going on in my head, so you don't have to listen to this scratchy, crummy sounding voice any more than you have to. So hopefully in a week or so we'll be getting better with that. So look, thanks for your support. Take care.